Hello, everyone. This is Analyzing ETFs. I'm your host, Dr. B. Today is Sunday, June 28th, 2026. This is episode number 28. And the reason why I always put the dates in there because when I'm analyzing ETFs, I like people to know what date it was because what has happened on June 28th, 2026 could be different than what happened on June 28th, 2024 or what's going to happen in the future on June 28th, 2028. And today's ETF is on low risk savings and investments. So, high yield savings. If you put your money in a high yield account, you're going to get right now between 3.0% to 4.15% with no minimum balances up to $5,000. Or you can have a CD, which is called a certificate of deposit, and rates right now are 3.5% to 4.1%. And once again, the reason why I put the dates in there is because this could change in 6 months. Timeline for these percentages currently are 6 months to 4 years. You can put your money into what's called U.S. Treasury bonds, and you're getting 3.6% to 4.9%, and the timeline there could be anywhere from 1 month up to 30 years. However, there are low-risk, highly fixed income ETFs that currently have SEC yields ranging from 3.53% to 4.26%. Because you may not want to open another account. You may be happy with your brokerage account or where your money is in a Roth IRA or standard IRA. But these ETFs have adjusted expense ratios also ranging from 0.03% to 0.09%. And they are as follows. The iShares 0 to 3 month Treasury bond ETF, known as SGOV. Vanguard Short Term Treasury Index Fund ETF, VGSH. Vanguard Intermediate Term Treasury Index Fund ETF, VGIT. All three are different, but all three also could give you very similar returns in the long run. So let's get started with SGOV, the iShares 0 to 3 month Treasury Bond ETF. I do own this in my brokerage account. Matter of fact, what I'm going to show you today, I own all three. This is a U.S. fund ultra short bond. It has total assets of $96 billion, not $1 million, $96 billion. It's a high limited fixed income of AA governmental bonds. There are 22 U.S. Treasury bills at 0%. What does that mean? The 0% label means that the U.S. Treasury bills held by SGOV are zero coupon bonds. In other words, the bond pays a 0% regular interest rate while you hold them. A zero coupon bond is an investment in debt that doesn't pay interest. Instead trades at a deep discount. The bond is realized at its full maturity date when the bond is redeemed, which would be anywhere from 0 to 3 months, for its full face value. Now take a look at this graph. When I saw this graph the first time, I said, wait a minute, for those into trading, this might be a good idea to short on the last day of the month, and then on the first day of the month, cash in. If you take a look, looks very interesting. You buy, if you want to buy, you buy the first of the month, and then you keep it, and then the first of the month, next month, you buy another share, and then you buy another share first of March, then April, then May. So this also looks pretty good for trading. In other words, you sell the short the last day of the month, and then you hold on to it to the first day of the month and then cash in your winnings. Now, how much could you win? Well, I noticed a trend where it's going down about 27 cents every month. Now, I don't know if you need like 10,000 shares or $10,000, and then what do you get? How much? $27 on that? $270? $2,700? I'll find out when I start trading this, maybe June 30th, July 1st. Stay tuned for that episode. But you can see it only has one negative volume the last day of the month, or the first day of the month. Interesting. But this is low risk. My friend of mine named Nancy, with a laughing face, she likes low risk, but with low risk, you do have low return compared to equity funds. This has a risk score of only 2. Again, I get my information from Morningstar.com, so it's quite conservative. Now, how much money are you going to make in 10 years? Well, this has only been out since it looks like 2019 or 2020, mid-year. But the 5-year APR of return is 3.58%. The yield is 3.53%. So you're not going to be making double digits like you would on your growth funds or maybe your growth stocks. But this is a place to shelter your money when, okay, you've made your money in growth ETFs like I have. I still want to make my growth in ETFs, but I want to still be able to, have some money stable at night. So again, if you invested $10,000 back in, let's just say June of 2020, or $10,000 today would have an increase of $1,934. The adjusted expense ratio is only 0.09%. Now it's taken out in the beginning, so that does not affect the annual percentage rate nor the yield of return. So that's SGOV. Here's your next alternative. VGSH, Vanguard Short-Term Treasury Index Fund ETF. That's a mouthful. So this is U.S. fund short government bonds. Total assets are $33.9 billion. It's high limited fixed income of AAA governmental bonds. 1 to 3 years remaining to maturity. The holdings is 91 U.S. Treasury notes. Okay. Now, the fund, we should go back. Let me go back to the last slide. I can't do that. Okay, but the fund actually tracks 1 to 3 year bonds. So they can mature anywhere between 1 and 3 years. Now, if you notice this, we have a selling trend since March the 1st. It peaked at March 1st, looks like around $59, and it's been declining. So if you're a trader and somehow you know how to trade this, you would sell this since March the 1st, and you would stay in this trade. You would keep on staying in this trade. It's down to $58.25. But again, I'm not a trader yet, don't want to be, but you can see it has a lot of red volume here, a lot of selling, and some green. So it's a mixture of red and green. Red is selling, green is buying. This is still considered low risk, but low return compared to equity funds. It's rated at 6, a conservative score. It's also considered this. If you versus the category of your 1 to 3 year Treasury bonds, it is below risk, so that's a good thing. But it's also above the return. So that's actually, it gives you a little bit of high reward. How much reward? Let me show you. Well, since 2021, we'll say, or going back, let's say maybe the last 10 years, it's up about a couple $1,000. So it's at $12,025 based on a $10,000 investment. But the last 3 years, what we're looking at here is a 4.27% APR. And the yield is at a nice, comfortable 4.12%. The adjusted expense ratio is only 0.03%. Once again, what does that mean is you're spending $3 for an investment of $10,000, which seems like a no-brainer. And again, why would you invest into these kind of funds? It's if you don't want to open up another account, let's say with TreasuryDirect.com, where you can actually buy Treasury bills, which I did, which are incredibly safe, backed by the U.S. government. But if you already have a brokerage account or an IRA, yes, you can buy these in your brokerage account and IRA and not open up another account. And then the third one I'm going to show you is VGIT, Vanguard Intermediate Term Treasury Index Fund ETF. The fund tracks a Bloomberg U.S. Treasury 3 to 10 year index. That's called intermediate. Long term would be anywhere from 10 years to 30 years. But this is a market weighted portfolio of U.S. Treasury bonds, like I said, with 3 to 10 years remaining to maturity. U.S. fund short intermediate government bonds. That's what they are. Total assets are $49.45 billion. Once again, high, moderate, not high limit. This is high, moderate fixed income of AAA governmental bonds, so it's a little bit different than VGSH. Of course, it's different because they're held 3 to 10 years remaining to maturity. Now, does that mean you have to hold on to this ETF for 3 to 10 years? No. But again, the longer you hold on to it, the more money you're going to make, but it's very conservative. It holds 103 U.S. Treasury notes. Now, what's this trending like? Well, since March 1st, what we have here is a nice sell trend, just like you saw in VGSX. So from March 1st, it was around $60 and we'll say 72 cents, and then it's been selling since. So right now the price is about $59.16. So you pray, how can you make money when it sells? Well, you make money on dividends. So on March 2nd, it paid a 17.5% dividend. And then on April 1st, the price dropped. Well, if the price dropped, that means the dividend goes up. Yeah, the dividend went up to 19.6 cents on April the 1st. And then in May, we had some, it went back up and then down, not down enough to go to make your dividend go higher. It went to 0.187 dividend on May the 1st. So you actually lost a little bit in dividend, but is the difference between 18.7 cents and 19.6 cents? Not that much. But then it's gone down again a little bit on June 1st. So this is down, went down a little bit. So that would make sense that the dividend went back up to 0.195 or 19.5 cents. All right, so this pays a monthly dividend. That's another reason why I like these Treasury ETFs. It's conservative, risk, and low return compared to equity funds. So what do we have here? We have a risk score of only 15. Again, low. If you want something that's low risk, that's going to give you some decent returns, this is something you want to get into. Yes, I hold all of these in my accounts, in my IRA and in my brokerage account. So I practice what I preach. I mean, mostly everything I show you, I own. I just won't show you how much I own, but it's a good investment, good amount. So let's see, risk versus the category. Is it risk? Yeah, it's below risk compared to its category of Treasury bonds, intermediate. The return versus category is above average. That's a good thing. Let's see what it is. So 3 years APR is 3.72%. That's paying more than your 6-month CDs right now. The SEC yield is at 4.26%. That's pretty good. The adjusted expense ratio is only 0.03%. All right, so best Treasury ETFs? Possibly. They're stable, they're safe, smart. So your choice is SGOV, iShares 0 to 3 month Treasury Bond ETF, VGSH, Vanguard Short Term Treasury ETF, or VGIT, Vanguard Intermediate Term Treasury ETF. Don't forget, past performance is not indicative of future results. And once again, please watch my news website at benice29.com. And please subscribe to my channel and tell your friends. Thank you very much for watching my video. I'll be back in a couple of weeks with we'll just do something a little different. We'll profile a couple of mutual funds. Take care. Happy July 4th holiday, everybody.